Mining and renewable energy company Exxaro Resources reported a 5% revenue increase to 40.7 billion rand for the year ending December 31, 2024. However, EBITDA dropped 22% to 10.4 billion rand and earnings per share fell 32% to 31 rand and 92 cents. Now, the company declared a final dividend of 8 rand and 66 cents per share and initiated a 1.2 billion rand share repurchase program. Moreover, coal revenue rose 6% due to higher exports, despite a decline in domestic sales linked to reduced demand for Eskom. Looking ahead, Exxaro remains hopeful for South Africa's economic growth, buoyed by better investor sentiment and infrastructure reforms. Analyst Imelo Mbanja covers the latest insights.
I think I would classify this outcome from Exxaro, particularly when it comes to revenue generation, as being resilient. Evidently, the company was able to navigate a very tough operational environment where transportation or logistical infrastructure remains challenging. Inflationary costs are still high and growing, as well as maintenance costs. So revenue in numbers, it grew by 6%, mostly due to a 6% rise in coal revenue. Energy revenue as well also increased quite a bit. But the rise in coal revenue was mostly due to higher prices that were realized in the domestic environment, despite lower volumes. Offshore, the seaborne prices were much lower, despite higher volumes over there. Headline earnings per share, we saw a decline there of around 36%. That was very well guided for by management, so we expected that. However, I think the market was a bit surprised by the consensus miss, about 14% consensus miss. Nevertheless, we saw a healthy cash position at the end of the financial year, which supported the dividend payout, continued dividend payout. The group remains with a very healthy dividend yield. However, the group also announced a share buyback. You remember last year they announced a special dividend. So this time they announced a share buyback, which is subject to operating and market conditions. From an outlook perspective, I think things remain uncertain. Coal will depend, particularly locally, on and the addressal of rail and as well as Eskom's challenges. Offshore, the dependency or the hope is still that the stimulus measures by Chinese authorities come through and address the current oversupply of the market.